We're jumping straight into United States Antimony today. Everyone is watching the price action, but the real story is the structural vacuum created by the China export ban and the massive Defense Logistics Agency contract.
Exactly. You're tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds, make sure you subscribe and hit that like button. We are tracking these breakout stories every single week, and you do not want to miss the next one.
So today provides a fascinating setup. We are looking at a company that is currently the only game in town for a specific critical mineral here in North America.
The only one.
But, and this is a big but, if you open up the 10K and look at the balance sheet, the financials look, well, messy is a polite way to put it.
Yeah, messy is one word for it.
Hey.
So it's a classic conflict, right? Are we buying the massive growth potential, or are we buying a whole lot of unpriced risk?
That is the question of the day.
And honestly, looking at the chart, it's hard not to get excited about the growth side. I mean, this stock is up 415% in the last 12 months.
It's a rocket ship.
And just in 2026 alone. And you have to remember, we're only in late January. It's up over 75%. That is the kind of momentum that usually signals, well, either a massive fundamental shift or a speculative bubble.
It's vertical, and usually when you see a move like that, my instinct is to assume it's all hype. But there is a very specific news hook that just dropped a few days ago.
Yeah, between January 20th and 23rd, that's the acquisition of the Montana flotation facility. They finally closed that deal.
For just under $5 million. And, you know, while $5 million sounds like a small number in the grand scheme of Wall Street.
It's lunch money for some of these guys.
Right. But it changes the entire identity of the company. It really does. It signals that this isn't just a small, scrappy mining operation anymore. This is evolving into a pure play national security asset.
Okay, but let's back up. Before we get ahead of ourselves, why is everyone suddenly obsessed with antimony? What broke?
It's not just broken, it's completely severed. The macro setup here is a textbook supply and demand shock. You have antimony prices up 500% in 12 months.
500%? I mean, that's crypto-level volatility in an industrial metal that is unheard of.
It is, and the reason is simple. Geopolitics. For decades, China controlled over 70% of the global antimony supply. It was cheap, it was accessible, and nobody in the West worried about it.
We just outsourced the dirty work.
We outsourced it. But back in December 2024, China enacted a strict export ban. They basically turned off the tap to the West.
Specifically to the United States.
And that created this massive supply void. Suddenly, the U.S. looked around and realized, wait, we need this stuff for munitions, for flame retardants, for batteries, and we can't get it from the main supplier anymore.
So this is where the moat concept comes in. Because usually when a commodity price spikes like this, competitors rush in, right? Why hasn't that happened here?
Because you can't just spin up an antimony smelter on a Tuesday. This is the key. United States Antimony is a structural monopoly. They own the only 2 permitted smelters in North America.
The only 2. One in Thompson Falls, Montana, and the others down in Madero, Mexico.
That's it. So if you want antimony smelted on this continent, legally processed into usable metal, you have to go through them, period.
And building a new one would take, what, years?
5 to 10 years, minimum. You have EPA impact studies, local zoning, state regulations. I mean, it is a regulatory nightmare. Even if a massive company wanted to compete today with unlimited cash, they would be tied up in court until the 2030s.
Wow. So they have a 5 to 10 year head start just because their infrastructure is already there.
They're sitting on the only functional piping for this entire industry in North America. And that brings us to the mega catalyst. Because the government knows this. They are not sitting on their hands.
The Defense Logistics Agency contract. This is the game changer.
It is. It's a sole source, indefinite delivery, indefinite quantity contract. Value. $245 million.
$245 million. Okay, stop there. For a company like Apple or NVIDIA, that's a rounding error. Let's put this in context. How much money did United States Antimony actually make last year?
Last year, their total revenue was hovering around $15 million.
15 million.
Okay, let that sink in. $15 million in annual revenue versus a $245 million contract. That is nearly 16 times their annual revenue sitting in one government contract.
It's transformative. And you used a key phrase there, sole source. Explain what that means.
Sole source means the government did their research and concluded there was literally no one else capable of doing the job. They legally couldn't even put it out to bid. They had to go to United States Antimony.
That is the definition of leverage. When you are the only person selling water in the desert, you don't have to offer a discount.
You set the price. And this all ties back to that news from a few days ago, the Montana flotation facility.
Right, the $4.75 million deal. Explain what a flotation facility is. It sounds like something involving pool noodles.
Not quite. In mining, flotation is how you separate the valuable minerals from the junk rock. You crush the ore, add some chemicals and water, and the valuable metal literally floats to the top in a froth.
Okay, so before this deal, they were buying pre-processed ore from other people.
A lot of the time, yes. They were dependent on third parties to get the rocks ready for the furnace. They were basically middlemen for part of the process.
But now,
they can execute a mine-to-market strategy. They dig it up themselves, process it at this new facility, and then smelt it at their own smelter.
so they capture the profit at every single step of the chain.
Yeah.
That sounds like it should drastically improve the bottom line.
It should. Vertical integration always improves margins if you can manage it. And there's a bonus here. This facility can also process gold and silver.
Oh, really? Is that significant?
It's very significant. The ore they're digging up for antimony naturally has precious metals mixed in. Now they can recover that gold and silver and sell it. It's essentially free money on top of the antimony.
It's like buying a house and finding out there's a rental unit in the back that pays the mortgage.
Perfect analogy. So the bull case is a regulatory monopoly, a massive government backstop exploding prices, and they just bought the machine to keep all the profits in-house. It sounds like a slam dunk.
It sounds too good to be true. So
Yeah.
let's look at the flip side. What are we missing? What are the risks hiding in those messy financials you mentioned?
The ugly truth is that despite all this hype and the soaring stock price, the company is still losing money.
Still, how is that even possible with prices up 500%?
In the last report, they posted a net loss of $1.73 million. Their profit margins are actually negative, about negative 3.4%.
That doesn't make any sense. If what you sell quadruples in price and you have a monopoly, how are you burning cash?
Capital expenditures, CapEx, you have to spend money to make money, especially in mining. They're restarting that Madero smelter, expanding Thompson Falls, integrating this new plant. All of that costs cash up front.
So they're burning cash now to build the capacity for that government contract later. It's a timing mismatch.
Exactly, growing pains, but it creates a liquidity risk, and clearly some sophisticated investors see that risk.
How do we know that?
We see it in the short interest. It has spiked. It's up over 12% recently and now sits at nearly 18% of the float.
Whoa, 18%. That is incredibly high, so almost 1 in 5 shares is betting the price is going to crash.
It is, and their logic is, the stock ran up 400% way too fast. It's priced for perfection. Any little stumble, any delay, and this thing could get cut in half.
So the bears are saying the valuation is just.
Yeah.
It's gotten way out ahead of the actual profit.
Exactly. You're paying a premium for future government money, not current operational success. And that brings up the execution risk. It's one thing to sign a contract.
It's another thing to actually deliver the goods. This isn't software.
That is the biggest danger here. They have to do 3 really hard things all at once while the Department of Defense is breathing down your neck. It's a high-wire act.
And if they slip?
If they miss a deadline, if there's a technical issue at a smelter, the stock won't just dip, it could crash back to single digits. The bear case is probably in the $6 to $8 range.
Ouch. That is a long way down. Okay, so the stakes are high. What should people be watching in the next, say, 30 to 90 days? What are the triggers?
First, earnings are right around the corner. Late February, early March.
And what are we looking for? Not just revenue, I'm guessing.
No, ignore the top-line revenue number. Everyone knows that'll be up. You need to look at gross margins.
Are they becoming less negative?
Precisely. Are they losing less money per dollar earned? If margins are improving, it means the vertical integration is working. If they're still deep in the red, that's a big red flag.
Got it. Margins, not sales. What else?
Operational milestones. We need to see a press release that says the Thompson Falls smelter expansion is done and running. If that gets delayed, the stock will get punished.
And what about the government money? Have they actually seen any big checks yet?
That's the other big catalyst. The first order was just a $10 million test order. We are waiting for the next tranche. Watch for news on the first large order.
So a headline like, UASC receives $50 million order from DLA. That's the signal.
That would be the rocket fuel. That confirms the whole thing is real.
And finally, what about the chart? Where are the lines in the sand for traders?
There's a strong support level around $11 to $12. That's where buyers have stepped in before.
Psychological floor.
Right. If that level holds, the short sellers, that 18%, they might start to get nervous. It costs them money to hold that position every single day.
And if they get nervous, they might be forced to buy back their shares to close the position.
Which causes a short squeeze. Demand spikes, and the price can go vertical just from that alone.
So $11 to $12 is the key level. If it breaks below that, look out below. If it holds, fireworks.
It's a battleground right now.
Okay, let's wrap this up. We've looked at the monopoly, the government cash, the messy financials, and the army of short sellers. What is the final verdict here?
If I had to put a number on it, I'd give this a bullish score of 8.2 out of 10.
8.2. That's pretty high, given the risks we just talked about.
It is high, but you have to weigh the risks against the necessity of the product. The United States military needs this company to exist. This isn't a new social media app. They make the raw material for tank shells. They will not let this company fail easily.
So the government is a safety net. It's a too-big-to-fail logic, but for a tiny mining company.
In a way, yes. It's an asymmetric bet. The downside is limited because the customer is desperate. The upside is driven by how efficiently they can get rocks out of the ground and into a furnace.
But this isn't a stock for day traders, though.
No, this is a 12 to 18-month hold. You have to be patient. It's going to be a bumpy ride, but the trend is undeniable.
A national security play disguised as a dirty mining stock.
I love it. You know, it raises an important question for every investor. In a world where supply chains are breaking, is the most valuable asset the fancy tech software, or is it the dirty industrial plant that makes the stuff the tech runs on?
That is something to think about. The revenge of the old economy. All right, that is the lowdown on United States Antimony. If you enjoyed this, do us a favor, subscribe and leave a comment. Are you buying the breakout or waiting for the dip? Let us know.
Thanks for listening, everyone.
We'll see you next time.